What's up, everybody? Big Jonas here in the house, Thursday, January 16th. Checking out the audio. Sounds good. Thank you guys for joining me. What's up, Ravi? What's up, CY? What's up, SS Swartz 88? You're always first, second, or third, but you're first in my book. What's going on, everybody? Big Jonas here. Let's talk some Bitcoin. Remember, guys, you can follow me on Twitter. I'm at Big Jonas. I share my best ideas. This is not financial advice, just what I'm looking at in the charts and some thoughts I have over crypto and the general trading community. Hey, Jeanette, what's up? Hakan, what's up? Pulling no girls. Thanks for joining me today. I'm also part of the Flux Trading Group. Remember to check them out, fluxtradinggroup.com, and please check the affiliate links I have below if you would like to support this free channel. What's up, Brad Anderson? Thanks for joining us here. So I definitely have a bunch of charts I want to check out. Clearly, Bitcoin has made some tremendous moves over the past several days. I wanted to start with some lower time frame stuff. Then we can zoom out to some big picture as well. So just a couple things here. I'm going to start. I'm on the hourly chart. We can see when we actually did have our big breakout here a couple days ago, 8,100, and then we got all the way to $8,900 there. So a big $800 move in like 40 hours. We can see the volume really started to come in there, and as you can see over the past several days, we've been kind of losing our volume momentum here as we are still ranging in a arguably very bullish $8,600 area. 84 to 8,500 was a very big area that Bitcoin really needed to kind of trade above, and it is doing that. So these are definitely hard to argue with how significant we've been seeing and how significant these moves are. So just from a low term time frame situation here, we did have, and my friend Big Cheds talked about this last night on one of his tweets, something called an M top here, where we have this double rejection of a very key area of resistance, and I'll discuss that in a moment. This $8,800 area here, we've tried several attempts to break through it. Bunch of upper wicks, bunch of rejections here. And we trended a little bit lower than the range on this diagonal. And whenever we broke this diagonal, we always look for a back test to confirm what was previous support is now previous resistance. And sure enough, we are basically seeing that resistance hold for the time being. We see this rejection candle here, 87.65. But we still haven't seen a very nasty rejection, really any of these candles here. I'd be hard pressed to argue that we've seen the big rejection candle. Obviously, we have upper wicks here, and you don't necessarily have to have that big rejection, that big shooting star, or that big multiple upper wicks in a row to really quantify that the move is over. We're still, Bitcoin, even with this slight pullback, is still holding, as I said, a very bullish posture while it maintains trading above 80, really $8,500 is really a key area here. I want to go to the 4-hour and kind of zoom out a little bit and talk about this particular area of price action and the historic significance between 85 and $8,800 here. Now, a couple things here. Remember back here when we had our initial breakdown, we can see that our upper wick here also touched $8,800 before finding that major rejection. This is more of a major rejection candle that I don't feel we've really seen yet on the 4-hour at least. We can see that right here. And again, that is another area or another example where this $8,800 of significance is that very much significant place. We can also go back in time here to May of 2019. 2018, where when we had our first attempt to get above and really break that 9K area, there too was that very significant resistance and rejection area. So we have a lot of history in this $8,800 to $8,900 area where Bitcoin has initially tried to get above, found that resistance. But as you can see, what happened both these times is we did have that pullback, and then we had that advance that actually broke us above. We did have that pullback, and then we had that advance that broke us above. So we really haven't had the pullback yet, but if we do, that would still fall in line with previous history where we have the pullback and then we have that eventual advance above. So these are definitely scenarios that are still in play from a historical standpoint because we've done this a couple times. Now, the more we do this particular pattern, the less of a chance it actually has to repeat itself. Once the crowd catches on, so to speak, it becomes less likely. So this is what happened the last couple times here, and these can be examples of, okay, this is their initial rejection. We definitely have a pullback here, but we can see we can definitely get above it. And we can go back, I want to go back here to our 2018 bear market. And, we didn't have, yes, there was history here. Yes, we were actually able to get above it in this area here, which I definitely want to discuss. But this was where we basically were able to put in that lower high here. So really, this particular area, $8,700 to $8,900, has been more touched and more significant in the 2019 and now 2020 price action of Bitcoin. Remember, we are still holding these lower highs, and we are still, I believe, in our parallel channel of resistance. Now, I get asked a lot. I say, hey, Big Jonas, do I use the wicks? Do I use the candle bodies? Which ones are the correct ones to use? And the answer is yes. They are both correct to use. You can use them. Now, things to kind of caveat on what I mean by this. Obviously, different exchanges don't have the same wick rejection areas. We saw, for instance, in this October pump we had in Bitcoin, on Coinbase we got to 10.5, but on Bitstamp we got to 10.3, and in Phoenix we got to 10.4, and I think in BitMEX a little under 10.4. So the wicks and stuff are not necessarily across the board, equal across the board in all exchanges. And what I mean by that is these wicks, especially when they're much higher, this is like your last gasp of FOMOers coming in, where there's very little pushing it to that next extreme. And because of that, you have the quick fall and you have the exaggerated upper wick, which we saw here on this daily candle, being the high of the day at 10.5, but actually closing the day out at $9,200. So almost a $1,300 upper wick on that Coinbase exchange. That did set our second line here of declining resistance, and as you can see, we're still bashing against it one more time. Now, I'd said that when the market sees specific things in the price action that it can keep happening, the third time might not be the same scenario. And what I mean by that is because we keep bashing against this line here, doesn't necessarily mean that it has to hold. We can definitely consolidate here for a little bit and then boom, poke our head up. Maybe we do some sort of a back test to confirm what was once resistance is now stronger support, and then off to the races we can be. So this is definitely a scenario that is still in play because we are still hugging very tightly our upper resistance diagonal. But if history does repeat and we get the rejection, and the other rejection here, sure enough, we're going to be drifting back down and back lower and potentially find a little support on our center line here, and then that breaks, and then the lower channel support could definitely be in play, and that is a very distinct possibility as long as upper channel resistance continues to hold, and not only continues to hold, but really has been setting this bearish consolidation trend ever since we topped off here at $13,700. Who's in the chat room right now? Let's see who haven't said hello. What's up, DA Only TW? What's up, RJ Jamal? What's up, Bud Thompson? What's up, Cornholio? Timeless Being, what's up, my friend? CCK, what's going on as well? Remember, guys, hit that thumbs up button if you're enjoying my content here on this fine Thursday, January 16th. Much appreciate. 61 of my closest friends hanging out with me today. So let's look at a couple other things here. All right, let's talk about inverse head and shoulders. So yes, this was clearly an inverse head and shoulders. It did play out. Now, the reason I'm saying this played out is because when we figure out what is our, what is it called? What is um, wow, I've lost the term in my head. What is our assumed advance from the head and shoulders, and what we really use to calculate this is the differential between our neckline and our head. And our neckline, more or less subjective, but I'd say it's somewhere in this $7,700 range. And obviously our head bottomed out at $6,400. And if we extrapolate that, measured move, that was the term, measured move. If we extrapolate that from our neckline to our current price action, you can see we're pretty much right there at our measured move from head to neckline, and then neckline to breakout target. So the completion of this inverse head and shoulders is completed. And that is definitely notable because now the narrative of the inverse head and shoulders has played out, and we can now move on and look at this from a different structural way, basically. I want to discuss a couple of my tweets that I've put out recently. What's up, Mr. Pabilonas? What's up, Cryptotone Loke? What's up, Doxy? Hey, what's up, Justin Dart? Thank you for joining me today. Guys, remember to follow me on Twitter. Almost at 44,000. Truly can't believe it. Truly blessed. Thank you guys so much. Guys, you were aware I put this out 2 days ago with our initial touch and rejection of our upper channel. And of course, that resistance is still holding on the daily chart. I put this out about 25 minutes ago, and I definitely want to talk about funding. For those of you who are not leverage traders, who don't really have a lot of experience leverage trading, the way that funding rate works, I'll kind of correlate this to gambling. If you have a team that's a very good team and they're expected to win, it's not just, you put money on them and you get an equal 1-to-1 on your bet. There's a money line, and you basically just don't put $100 to win $100 on, let's say, Kansas City, because they're basically favored to win. So you got to pay a premium if you want to bet them. So basically, you got to put up $100 to maybe win, $20, $30, $40, but definitely not a 1-to-1 ratio. So the way the funding rate works is, as the market becomes more bullish, as the price action becomes more bullish, it will cost you more to maintain a long position in your leveraged trade. And that funding rate recalculates basically every 12 hours. And what this is showing us is that when the funding rate goes positive, when it does cost more money to hold your Bitcoin leverage longs, at least over the course of this downtrend since our top, this has proven to be basically a topping off standpoint of bullish price action, where the funding goes very positive and the price action is unable to achieve a higher high. The funding goes very positive, lower high, very positive, lower high, positive, lower high, and for now we've gone positive and we are still holding our lower high. And thusly the inverse is true. When it costs more to hold your short because the market feels like, okay, we're going to go fall a lot farther here. That is generally when you get that reversal. So we have our negative funding, we have our stabilization of price, advance, negative funding, price stabilizes, advance, negative funding, price stabilizes, big advance, negative funding, price stabilizes, and now there's our advance. Now, this is it's like correlation and causation, where we basically have the market, the money flow is trending more bullish, and therefore we see that that rate is higher. But this definitely is clearly showing you that there is an inverse effect when the market gets very bullish. So far, the rug has been pulled out of these plays so far ever since, until basically proven otherwise. So definitely something to think about. Now, I want to talk about Bitcoin. From the past couple days of price action, I kind of noticed this is very interesting here. So this is the last 30 days of Bitcoin daily volume. We can see back on December 16th, we're doing about 20 billion a day. We had a couple spikes up to 30, but mostly we were around 20 to 25 billion dollars every single day. Couple teens here, couple teens, again, high 20s, low 20s. And then look at the past 2 days here. We had this big doubling of our volume. This is when we started the day at 8,100 and our high was 8,900 there. So this was that big pump. And look what happened the follow-up day here. We have the same volume, okay? And our price action was within a $125 to $200 range here. So similar volume, similar range. Now I can't imagine this was this was bullish volume, obviously, because the price action showed it. We went up from the open of 81 to the high of 88. Now, then the follow-up day, we had pretty much the same volume. We held pretty much the same market cap, and we held pretty much the same price. So I actually see this as basically selling that here was our load up, here was our pump, and then we had a lot of basically profit taking come from that area, even though the price action is stabilized in this area. I don't really see this as continuation of that bull intensity, at least yet. I actually see a lot of this as basically profit taking from the completion of the inverse head and shoulders, from the fact that this area has shown significant resistance, previously speaking here. I want to talk about Fibonacci, and I want to go back to, well, actually, let's go back to Twitter here, because I did put a tweet out about this. Here it is. Definitely got a lot of response. 300 likes. You have to like that. So we pick apart what happened in 2018 bear market. We pick apart what happened in 2014 and 2015 bear market. We try and find, fractals and similarities and things we can basically say. We try and find that, okay, this is playing out very similar. So here's an example where back in 2018, we had a pretty big corrective move here from area 1 down to area 2. Bitcoin was a hair under 10K and then fell all the way rather quickly here to $5,700. Then we had a very nice pump, very nice pump. It went from $5,700 back up to $8,400. And this hit right in our golden pocket zone between 61.8 and 65%. Now what this means is we were able to get 65% of the way back up to our original local high here of $9,900. We fast forward to the past couple months. Here's our 1, again, right around 10,500. Here's our 2, which is a big fall rather quickly, similar to what happened last time. We found our support around the $6,400 area, and then boom, a very quick advance, very similar. Remember, this is really bullish here, this mega candle, 1, 2, 3, 4, there's 5 days of bullish green candle price action in a row there. 1, 2, 3, 4, 5 days of bullish green candle price action in a row here and bringing us just up to the underside of our golden pocket, which could still take us to a little over 9K if we actually get to the area we originally had topped out before. So I don't discount this as doing another example where the 618 area has stopped all bullish advances, and we can be doing something very similar in this current move here, where we are finding resistance just under our golden pocket, but we are still finding that support above the 50% zone. That's why the $8,500 zone can still be a good catalyst of bullish continuation, even if we continue to consolidate in this area. Now, that 618 actually happened numerous times in our bear market here. Was it right here? Yeah, there was our tether pump back to 618, and then this one right here. Same deal. Look at that. It gets just above the 50, just under the 618, and then we fall off a cliff pretty fast here. So, Bitcoin, history tends to repeat. We are still potentially doing something like we had seen back in that 2018 zone. And, because of that, we could be still thinking of this at something like this, like a formation of a descending triangle. I should probably go to the daily with this one here. And what this would mean, we basically are beginning to create a very notable base of support. The mid 6Ks, something kind of similar to obviously what we had done here back in 2018, where we found a very defined area of support. So as you can see, one up here, back down, up here, back down, up here, back down, and the eventual fall. Here we have up here, back down, up here, back down, up here, back down. So this could be the roadmap for Bitcoin over the next few months if history is going to repeat this consolidation after a bullish, blow off top. Now, there is one thing that does make what's going on right now in Bitcoin a little different than what happened in 2018. Can anybody answer what the difference is? Begins with an H. It is Bitcoin's halvening, and Bitcoin's halvening is happening sometime around mid-May. And for those of you that do not know, the Bitcoin halvening, what that means is that the mining block reward gets cut in half. Once again, there's been two other halvings in the past. We went from 50 to 25, 25 to 12, and now I guess we're going to around 6 Bitcoin reward per block. And what this does is this limits the inflation rate of Bitcoin. As we can see, there are currently 18,164,025 Bitcoin that are in the circulating supply. That's kind of a subjective term to use, circulating supply, because we know that of the 18,100,000 that have been actually created, hundreds of thousands, if not over 1 million of these Bitcoin are probably lost forever. People, had them on their computer back in the day, didn't think too much of them, lost keys, lost wallets, lost codes, general loss. So although there's 18 million, there's probably a decent amount less than that. And then of that, how much of that is just locked up? Quite a bit of that is locked up. So there really isn't a tremendous amount of actual supply, relatively speaking. Don't think of it as just 18 million floating around the market every day. It's actually a much lower number, and that's very more interesting when you think about that. What's up, Robin? What's up, Mattis? What's up, Moonbase Lamberace? Go. What's up, RJ, GW? Yeah, so Brad, that's a good point. The 2017 parabola was much more extreme than 2019. So we can think about it this way, where this was 20,000 was tremendous here, and the drop from it was also very tremendous. We didn't get as high this time, so the differential in the way this is playing out, we have to keep that continued sense that we might not have the same tremendous, fall as we did last time. I want to talk about a couple more things. Let's go to the 3 day. We're still in log, and we've been kind of here. Let's clean up the board. Okay, so we've seen this before, obviously. This is our line of advance. Bitcoin has more or less hugged this. Every once in a while, it deviates significantly higher from this line. And as you can see, we have a deviation of epic mass here when we hit our 20K. We have other deviation, pretty epic mass here when we hit almost 14K. And now you can see we have hit that line once again, hugged it, and of course we are bouncing off of it. The problem I have with this is that we kind of have like the bouncing ball effect. You bounce a basketball, and every time it comes up and comes up and comes up, there is a lower high being put in. And this is the first advance off this line where we did not put in a higher high. If history was going to repeat itself, this move to 14,000 really should have taken Bitcoin above 20K. And that would basically be in line with every previous Bitcoin advance. Let me go to stamp and let me go to master. Let me go to stamp, and you can kind of see what I mean by that. Here's our high. Here's our higher high. Consolidation. Here's our higher high. Consolidation. And whoa, here's our lower high. So you see that already we have kind of changed this kind of trend here, where wait a minute, this is supposed to have been a higher high if we're going to keep this model in play, but we don't have that here. We have our first lower high with the consolidation still playing out. And that's notable because that is a deviation from the norm. Now, sure, we can, keep bouncing and keep finding support on this line and then keep riding up higher. Bitcoin very bullish, back to 20K, and then some ride in the future. Definitely a possibility. I don't believe it is, but definitely a possibility. What I think is more of a probability, and again, this is just speculating here. No one can see the future except Miss Cleo, and but the fact that we're hitting this line again, it doesn't really mean much to me. I think we can maybe come up a little more. I don't think this line's going to hold. I actually think it's going to break down. I think there's a chance we might do some sort of a back test. Remember, we can still back test this line, put in a higher high from current price action, but be on the underside of this line, and then have this kind of fold and follow down a more lower thing here. But then the halving comes into play. Well, every previous halving, Bitcoin has been on an uptrend, right? Going into the halving, not necessarily a parabolic advance, not necessarily a tremendous bull market, but definitely an uptrend. So for that to happen in May, which is 3-4 months away, that would basically mean that the bottom needs to basically be in probably in the next month or two, and then Bitcoin would basically reestablish some sort of an uptrend that would keep that historical norm that Bitcoin is in an uptrend going into the halvening intact, even if it's not a tremendous parabolic advance. And then we just start running, and then we start to really take off here. So this is definitely a scenario that would be consistent with bullish intentions and a very solid uptrend going into the halvening, which does happen in May. This is important. The inflation rate of Bitcoin is very important. I don't think a lot of people truly understand how important the finiteness of Bitcoin. That's the brilliance of it. Governments around the world, fiat, printing, printing, printing. The U.S. Treasury printing, printing, printing. We really haven't seen the inflation too much, except for obviously there's inflation in certain sectors such as education, such as healthcare. But until we really see it in the cost of energy and fuel, or the cost of basic goods like food and stuff. Right now, you can still buy the dollar menu. You can still fill up your tank with more or less the price of gas that was 10, 15 years ago. We can buy TVs for a lot less. We can buy computers for a lot less. But there are definitely some things that are tremendously more expensive than they were 15, 20 years ago, like health insurance, like the cost of education, which are definitely have seen tremendous inflation on them over the past several years. So we have to keep these things in mind, that at some point, the more we keep printing, the less value the overall dollar will have. But remember, the dollar is pegged or is relative to other currencies. So while they remain weak, we can kill printing and printing and printing. What's so special about Bitcoin is that it's finite. So the finiteness of it, and then eventually the scarcity of it, combined with continuation of hodlers just kind of locking up their stash, will put upward bullish pressure on the market in the coming years as Bitcoin's scarcity does become a real thing. Right now, if you want to buy as much Bitcoin as you want, you're free to do so if you have the funds to do so. But there'll be a point where, not that it will be scarce, that it will be hard to acquire, but that the valuation or price will be more consistent and really will add a very nice foundation of intrinsic and inherent value of Bitcoin in the long run. And we keep this in mind when we look at altcoin valuations, which is so important. When people talk about valuations of, I don't know, Ripple being 10, 20, $30 in the future, stuff like that. When you actually understand that a lot of these shit coins have billions and billions. Stellar, 20 billion. Cardano, 25 billion coins out there. That's a lot of cheddar. And that's why these are, sub dollar and probably should be a lot lower. Other coins that have a lot lower supply, stuff like, Link, Neo, these are more reasonable from a standpoint of, hundreds of millions of coins or tokens can in themselves have more of a intrinsic stabilizing value than some of the ones that have, just tens of billions of coin out there, which is just, that's a lot of coin. That's a lot of coin. So we basically see this as a factor to understand here. I want to talk about some more Fibonacci. So we all remember that Bitcoin. Let's do this. So this is kind of interesting here. Okay, so 2017 Bitcoin 20K, 2018 Bitcoin 3K. We were able to get right to our golden pocket. Boom. There's our resistance. Killed the rally to to the T. And we lost our 50% base camp support. We lost our 38% base camp support, although boy, did we test it a few times here. And we've been riding our 23% Bitcoin base camp support for quite a while here. And then there's our advance to it, which makes the 382, if Bitcoin can achieve it, at $9,500, again, a very significant area of resistance. But we've already tested it, right? And we really didn't get above it here. So this is another narrative where the lower high would definitely be in play and would be consistent with keeping this moving forward. And by forward, I mean lower highs and then eventually lower lows. So this is how we can look at it from a continuation of this current bull market where we hit the 618, we retreated back to the 236, found support on it, need to tackle the 382, the 50, back to 618, on and on and on. That's one way to look at it using the Fibonacci tool to quantify where we are on the whole schematic. But let's look at it, let's look at it from just where we are in this move here. So here's our bottom, here's our top. We're retracing, and where do we find our major support? So far, around the golden pocket area. Now, yes, we did break below the 65 on a couple attempts here. We had wicks, we had one, this is on the 3-day chart, we had about several days here where we were below it. Quickly, we were able to snap back above it. Back tested this wick here, found support on the 6.5, and then on we went. Closed above the 50% range here and are still finding support above it, which would put our next target, again, climbing up the mountain here to that 382, an area that, again, we did wick off on our last attempt. So these are levels that do correspond with price action, but do also correspond with achievable goals from a Fibonacci standpoint. This is another way to look at it. And now we're talking about climbing up the mountain this way, which is saying that, okay, there's our top, here's our bottom, and now we've achieved a support of the 382, which was once resistance, first had an initial rejection on it. And now, because of that, we can now target the 382. Sorry, the 236 was support. We can now target the 382, again, $9,200, which would put us in a double top situation to where we had found that resistance the last time. And if we wanted to quantify this as, okay, where would be a very good bullish target to achieve based on this Fibonacci level would be our golden pocket once again. That would put us between 11,000 and 11,300. And that would be very consistent with finding golden pocket resistance from this to this, and then from this to this. Okay, keeping that very consistent there. We could just be doing a very tremendous, gigantic triangle of consolidation here. You know, here's our lower support, here's our upper resistance, and as you can see, right, we're pretty darn close to getting towards our apex. Our apex would bring us to July. We rarely take that long to get up there. Bitcoin would have running room to, again, 11.3, 11.4, 11.5, maybe come back down, hold support at $8,700, and then one more push here, and then boom, the breakout. We're not too far from this. So from a structural pattern here, we're getting closer to the termination point, the apex point of our triangle consolidation here, which would be consistent with that. And wouldn't it be crazy if we're just putting some like giant, you know, like A, B, C, D, E, and then out of our E comes our breakout. That's definitely a possibility, and that would be consistent with continuing this equilibrium of high, a low, lower high, higher low, lower high, higher low, breakout. Okay, and this would take, this would take us most of the first half of this year and would take us, into that halvening as well. Also, bear in mind, previous halvenings, Bitcoin has dumped 20, 30% or so. Before the halvening. There was a quick dump before it a couple times. So there's definitely a lot of volatility that can be assumed the closer we get into the halvening. But these are definitely examples here of where we could find that continuation of that particular pattern, still playing out. Now, our extension, okay, of our initial impulsive wave, our pullback, and then our extending wave here. Let's do this here. Okay, go one, come back, and extend. And where do we find that resistance? Right at the 1618, right around 8888. Okay, so we have found that notable resistance, and that because this is an extended wave 3, we could still be in a very bullish 5-wave pattern here, in which our 4th wave can come down. And frankly, if our 1 is at 7,600, our 4th wave could come down as low as $7,600 while still maintaining a higher high than wave 1 before our 5th wave advancement. And since our 3rd wave is at a 1618, which is a pretty decent extension of our initial wave, we could quantify if we got as low as $7,700 and still held there to something around maybe the golden pocket extension of our 5th wave here, which would put us with just a slightly higher high of our current wave 3 resistance. And there would be a very clean, 5-wave pattern there. Does that make sense? Because we have an extended 3, because we know where our 1 ended here, we can extrapolate that 4 could go as low as, $7,700 and still have a bullish Bitcoin. That would definitely take a lot of people out of the longs who were loading up in this area here, put a lot of bullish doubt in the market. And when there's a lot of bullish doubt in the market, we tend to see reversals come through very quickly. Okay, let's do a little reset. How's everybody doing today? It's Big Chonas here, talking to you guys live. My thoughts on the Bitcoin market. Got 69 of you guys watching, only 27 thumbs up. Let's increase those thumbs up if you could. Also hit that subscribe button, really appreciate it. Remember to follow me on Twitter as well, at Big Chonas. Oscillators. Okay, so daily. Clean the board. Let's auto us out. Hold that. There we go. All right, so talking money flow, very nice. I talk about how our zero line is a kind of a line in the sand here. We do see, though, that we have boom, boom, boom. Okay, this is important. We have put in a lower high on our CMF, and we are topping off exactly where we expected to top off on chalk and money flow resistance. The CMF is very important because this basically shows how much real money is actually coming into the market, and it's pretty accurate to show the bullish intent of the market. But as you can clearly see, where are we rejecting? It isn't a random place. It is literally where we expected to find declining horizontal Bitcoin resistance. That's important. We get above this, right? That'd be very bullish. But for now, history is consistent in that rejection. Our OBV, it's kind of weak actually. This is a good primer for future advance. We try and find bullish divergences when they do show up. And we do have a clear double top here, very spiky here, and especially the second one here was a decent sized rejection, basically showing a lot of people were taking money off the table on this second pump here of the move. Daily RSI still looking very strong, but we can also see some structure in this. And what does this structure look like? It's kind of rising wedges, right? Something like that. You know, where we can still find a little support here on the low and then do one more up thrust. It's definitely a possibility, right? But we are still in this wedge that is getting just a little tighter and a little tighter. And you can actually see we can even go higher here with our extent of our move here is definitely continuation. This is our Stoke. We can see we did have that nice double bottom here of support, beginning to slowly roll this back over. And this would be consistent with putting a lower high in our Stoke as well. This is our squeezed Momo. Again, this is just a really cool histogram. You can see how high our mountain is here, but we can also tell that when our mountain does top off, we come roaring back down very quickly, right? These tend to be very strong peaks and then come off. Now we are still building here. We are still putting in this higher high, right? So we have yet to put in a lower high, so the mountain can still be climbing. And as you can see, we were able to get above our previous area of mountain resistance, just the tip there, okay? So we haven't seen the reversal in this yet, but we see historically when we do get that reversal, it tends to be pretty quickly, and we tend to basically go very high up and come down pretty much very quickly as well. Definitely keep that in mind. And of course, this is our BitMEX funding. As you can see, it's been costing quite a bit the past few days here to hold your leveraged longs. And this is getting back into an area right here where we tend to see that top out, and top out the previous times. So there's a lot of signals that we are getting toppy here on this move. This was a very big move in Bitcoin. So a tremendous move. Congratulations to all the longs that were basically buying Bitcoin under 7K and were able to ride this up for a couple grand, per Bitcoin with patience there. Congratulations indeed. So we have to assume, okay, consolidation is fine. We expect consolidation. Consolidation is healthy. But so far, every consolidation in this move, in these moves here, has quantified to a lower high and then lower lows. So is that trend going to continue? And as Bitcoin kind of traveled back down, to the low 5Ks, the mid 5Ks, this is definitely a scenario on the table until really proven otherwise. And what can definitely prove that otherwise is for the price action to get above this line of resistance, which currently is still holding. Whew. All right, 50 minutes, pretty good. Guys, thank you so much for joining me. It is Thursday, January 16. I am Big Chonas. It is the new year. Bitcoin has had a tremendous move over the past few weeks of the new year, but let's not get too cocky. Let's basically play this out and see what happens. Obviously, it's been a very exciting year for Bitcoin. We got the halvening. We have all sorts of institutional things having coming into play. And of course, with the U.S. equities market still extremely bullish, all-time highs again today, there's a lot of money floating around there. And if you're an investor and you've had a very good year in the stock market and looking to diversify some of your gains, crypto might be a way people begin to start to do that. So I'm very excited for 2020. It could really be a turning point in crypto. It could probably weed out some of the bad coins, the bad players, give more credence to some of the actual projects that actually have meaning and structure behind them, and not some of these just copy white paper shitcoins that are eventually going to fizzle out. So this will be a very defining year. I'm hoping we get more regulation too. I'm not afraid of it. I think regulation will add a lot more structure to the industry, and then that will definitely allow more investment to come in, because if people can know there's a lot more security and structure within this asset class, even though it's extremely volatile, that will basically allow Bitcoin to get more into the masses. So with that, it's Big Jonas here. Trade safe. I definitely enjoy these talks. Hope we talk soon. Hope you join me soon. Until next time, peace.